Greetings. This is Trading-Lesson20, delivered by Atwegbe Ehizoge. It is for forex traders, cryptocurrency traders, option traders, stock traders, and other related markets. You are advised to subscribe to this channel, share, likes, and comment. The lesson begins as this. The best bull reversal bars have more than one of the following: an open near or below the close of the prior bar, and a close above the open and above the prior bar's close. A lower tail that's about 1/3 to 1/2 the height of the bar, and a small or non-existent upper tail. Not much overlap with the prior bar or bars. The bar after the signal bar is not a doji inside bar, and instead is a strong entry bar, a bull trend bar with a relatively large body and small tails, a close that reverses or closes above the closes and high of more than one bar. Every trend bar is a breakout, and there are buyers and sellers at the top and bottom of every bull and bear trend bar, no matter how strong the bar appears. Since every trend bar is a breakout and trend bars are common, traders must understand that they have to be assessing every few bars all day long whether a breakout will continue or fail and then reverse. The most important thing to understand about breakout is that most breakouts fail. There is a strong propensity for the market to continue what it has been doing, and therefore there is a strong resistance to change. Just as most attempts to end a trend failed, most attempts to end a trading range and begin a trend also fail. A breakout is simply a move beyond some prior point of significance, such as a trend line or a prior high or low, including the high or low of the previous bar. That point becomes the breakout point, and if the market later comes back to test that point, the pullback is the breakout test. A breakout pullback that reaches the area of the breakout point. The space between the breakout point and the breakout test is the breakout gap. A breakout is an attempt by the market either to reverse the trend or to move from a trading range into a new trend. Big traders don't hesitate to enter a trend during its spike phase because they expect significant follow-through, even if there is a pullback immediately after their entry. If a pullback occurs, they increase the size of their position. For example, if there is a strong bull breakout lasting several bars, more and more institutions become convinced that the market has become always in long with each new higher tick. And as they become convinced that the market will go higher, they start buying, and they press the trade by buying more as the market continues to rise. This makes the spike grow very quickly. The best way for them to take a scary trade is to automatically trade only a third or a quarter of their normal trade size and use the wide stop that is required. They might catch a big move, and making a lot on a small position is much better than making nothing on the usual position size. Since most breakout attempts fail, many traders enter breakout in the opposite direction. For example, if there is a bull trend and it forms a larger bear trend bar closing on it low, most traders will expect this reversal attempt to fail, and many will buy at the close of the bar. If the next bar has a bull body, they will buy at the close of the bar and above its high. Traders have to assess a breakout in relation to the entire chart and not just the current leg. For example, if the market is breaking out in a strong bull spike, look across the chart to the left side of the screen. If there are no bars at the level of the current price, then buying closes and risking to below the bottom of the spike is often a good strategy. Every trading firm has its own measure of success, and at some point, enough firms decide that the trend has gone too far. They believe that there is little risk of missing a great move up if they stop buying above the old high, and they will buy only on pullbacks. If the market hesitates above the old high, the market is becoming two-sided, and the strong bulls are using the new high to take profits.